So it's not only,
afternoon,
it's the 2nd of April, it's actually the first trading day of the second quarter of 2012. So it's interesting just to see how bourses have performed not only in last week but also year to date. Let's start off with Nigeria because we saw the bourse down 2.4%. Year to date, flat, no real movement coming through there. Are we going to see the Nigerian bourse finally do well in 2012?
I think, we're hoping to. I think what we saw last week was it's reporting season in Nigeria. So we've been getting a lot of company results, especially banks putting out results. A lot of investors have obviously just been sitting back and waiting for results to come out. So we see exactly where we're going with corporate earnings and the fundamental story in Nigeria. So I think we believe it'll be positive. I think the stocks are cheap. I think the banks have been putting out relatively good results, particularly some of the good names.
The banking sector overall down 5.6%, if I'm not mistaken.
It's down. It's been led by names such as, First Bank has pulled back a little bit since last week. Stanlib IBTC as well put out some numbers last week that the market perhaps didn't like so much.
Union Bank declining a whopping 22%.
Sure. Union Bank has been through a lot of problems, as we know. These are banks that are sort of still waiting to get merged, I guess, into other banks after the sort of the consolidation and the cleanup. So I think, across the banking sector, it's the good names that you want to keep an eye on. You want to keep an eye on the names like GT Bank, on Zenith Bank, Access Bank is even pulled back. I think it's more a lot of profit taken from a lot of the gains Access Bank has given this year. So across the board, I think the Nigerian banks haven't done so well. It's been a mixed bag. I think with the Nigerian banking space, it's a question, I guess, of being a good stock picker. You got to pick the right ones. You got to pick, we believe, names like GT Bank, Access Bank. I think those are the ones that will sort of lead you forward, yeah.
Okay, so let's get into the Zimbabwean market because we saw market cap declining by around 2% last week. Year to date, the industrial index is down over 6%.
Sure.
Are we looking at a bourse that is offering immense value at this stage and can get rid of some of the issues that because we know there are issues right now, especially hitting the resource counters, but industrials also not performing fantastically?
It's a bit of a pity in Zimbabwe because I think the political situation in Zimbabwe is still sort of putting brakes on where the market can go. I think a lot of people are still worried about what's going to happen with the political situation in general, with particularly issues such as indigenization, issues around where the economy is going to go, around policy. And obviously, the issue of pending elections and constitutional changes in Zimbabwe are hampering a lot of growth. So I think what we've seen in Zimbabwe since the beginning of the year is I think the market is a bit tired of the same stories over and over again without some progress. So we've seen a lot more people sort of pulling back in Zimbabwe. The Zimbabwean market didn't do so badly last year as well. We might recall Zimbabwe last year was one of the better performers. It was slightly down last year, but it was one of the better performers. So I think from a portfolio management perspective, we're finding a lot of the guys are looking to take profits out of markets that did well last year, like Zimbabwe, and deploy it in other markets. For instance, markets like Egypt that are likely to do much better this year.
Okay, we'll touch on Egypt in just a bit, but let's look at some of the key companies in Zimbabwe. We've got Econet, Delta, Riozim. We know production issues across the board against all resource divisions within the company. Are you foreseeing a positive earnings outlook, at least for these companies, even if equities have had a good run, as you say, in last year?
I think Delta is a fantastic performer. Delta is one of those good companies. Delta, by the way, is a beverage company, is a brewery in Zimbabwe. Is an associate of SAB Miller. So it gets a lot of support, obviously, from the SAB side. It gets a lot of support from the region as a whole. Obviously, South African breweries being such a dominant player in the market. So I think Delta will continue to do quite well. I think no matter what happens, we always find that the breweries and the beverage sector tends to do quite well. So Delta, we think, will continue to do quite well. We saw just on the consumer names again, a company like Insco, which is one of the larger caps, putting out results over the last couple of weeks so far for about 59% earnings growth, So these are massive, sort of 60% profit growth is quite massive.
And Insco actually didn't perform that brilliantly because it was flat last week, so no real movement there.
Exactly, no real movement, yet the company still, fundamentally is performing quite well.
This is the point where we say the good news has been priced in. But let's touch on Egypt, because the Egyptian market is up 38% year to date for the first quarter. And as we welcome the second quarter, markets were down around 3.5% in last week. In fact, on the telecoms front, building and construction also shedding ground by 2%, property down 6%. Just a bit of cooling off in an overall bullish market.
I think, last week, especially, I think over much of March, over much of the March month, I guess, we've seen a lot more guys sort of profit taking. Egypt has had a fantastic run in January and in February. Egypt has been, as you mentioned, has been one of the best performing markets on the continent and perhaps in the world even, So I think we we're finding a lot more people now are starting to, you know, take money, a little bit of money off Egypt and look for other opportunities. The other issue in Egypt is obviously the political issues, again, like Zimbabwe.
We saw more tensions coming to the fore.
That's it, yeah. But we're still seeing more tensions between sort of the liberal parties, the Muslim Brotherhood, and obviously the army there with regards to, you know, how the constitutional drafts and the constitutional changes are going to go going forward, especially around what role religion is going to play in government going forward. So there's still a lot of things up in the air, I guess, in Egypt, you know, over the next couple of months. But from a stock performance perspective, I think, you know, we've seen the stocks do very, very well over the last 2 months. And I think, you know, a lot of the investors now are just looking at them thinking, you know, we've made a lot of money out of these stocks. Maybe it's time to take some out of the table a bit and, you know, let's look to deploy it a bit elsewhere.
Absolutely. Even though the Egyptian market is not at the levels it was pre-crisis. But let's delve into the Kenyan market, because we saw markets up around 0.5% last week. And then we also saw year to date, so the first quarter, Kenyan markets gaining around 5%. Lots of companies out with some positive results.
Sure. You know, I think Kenya is coming back onto a lot of investors' radar screens. The banks have done very well this year. Banks like KCB, like Equity Bank have done extremely well this year to date. So I think there's a bit more interest in Kenya. I think a lot of investors, you know, saw the problems in Kenya last year, particularly around, you know, the currency issues we saw last year in Kenya. The market also took a bit of a knock, obviously, last year in Kenya, and you know, in line with many other African markets. So from a Kenya perspective, I think the banks continue to lead that market into this first quarter. We've also seen now recently there's a lot more buying in a counter like East African breweries. Put out very fantastic numbers for the first half. It was sort of late in February, earlier March. You know, they reported sort of close to 38% profit growth. So I think a lot more people are looking back at Kenya. There are still a lot of risks in Kenya, macro risks. But I think a lot of us are looking back and saying, you know what, maybe there is a little bit of value in Kenya. Perhaps time to double back into that market and bring it back a bit.